All right, thank you for joining the Financial Brokerage webinar today on college funding in 5 easy steps with myself, Brian Leising, as your host. We appreciate you taking time out of your busy days this morning to join us, and we'll try to keep this short and sweet so you can get on with your next appointments. There will be a question and answer period at the end of the webinar. All questions must be typed. That can be done at the bottom of the control panel on your screen, and we'll get to those at the very end. But we'll start by delving right into the 5 easy steps you can use to help your clients utilize life insurance in the college funding process. And there are several things a person can do. Some of these will probably be review for many of you, and I'm sure you'll pick up some new concepts along the way as well. These 5 different steps really involve something for everybody at every economic level out there, whether your clients have got a lot of money, they have very little funds perhaps, or they're somewhere in between, as most people tend to be. And now these are steps you can actually start using today, probably on your very next appointment that you run. They're all going to be able to help your clients fund their children's college education. In some cases, you're going to be able to sell multiple policies per household. Each step isn't geared towards just one type of client. For the right client, you might be making several of these sales and using perhaps even all of these techniques. And hopefully, these sales will also lead to referrals to other family members. Now, I don't have a slide on this, but who's a prospect? Who should you be speaking to regarding college planning? And really anybody who has children in the household who are let's say under age 17, or anybody who's got grandchildren under age 17 or under age 18. If they haven't gone to college already, it's not too late. Although the earlier you start, the earlier it is to start using all of these concepts. So what are the 5 steps we're going to review? Well, we're going to start talking about the SmartTrack Toolkit, and we'll also review some fact finders that you can use. We'll talk about the products that are available, and then some alternative funding sources. But really, you have to start finding the people. Who are you going to get in front of, and how are you going to do it? And once you're in front of them, what do you say? What tools do you use to dig into their real needs? And then once you've done that, how are you going to solve the problem? And we'll go a little more in depth into some of the products that are available out there to use. And then we'll get into some alternative funding resources that you might not think of at first glance, but certainly you should be utilizing with the folks who you get in front of. So I want to start with something that's really both a prospecting tool and a information gathering tool, and that's the SmartTrack Toolkit. Now, this comes from the folks at smarttracktoolkit.com. It's not a company run by us, but we certainly have a link to them out on our website right now, and they do 5 things to help parents of students that plan to go to college. They can help you with college funding planning. They can help the students with test preparation, positioning to get into the college or university that they really want to go to, admissions assistance. Sometimes that can be a real Byzantine process, and they also have a way to help with student athletes if they are in the household. Now, we're going to focus primarily on the college funding end of things here, but your ideal client for these folks is probably somebody with a child who is just starting high school or maybe up to their junior year. They've got some money set aside already, so we're probably talking high middle to high income clients that work best with the SmartTrack Toolkit concept, although you can use this as a prospecting tool for just about anybody out there. So what do they do? How do you register? How do you use it? You've got to go to smarttracktoolkit.com. Let them know that you came to them through financial brokerage, or that you're contracted through financial brokerage. You'll be eligible for a discount that way. If you're not, you can still use them, but you want to contract with us and be eligible for that discount. They will then, once you register, be able to issue you some business cards that you can use with your clients. So you can certainly use this whole concept as a prospecting tool, send out mailers or emails to existing clients, or try to find new prospects out there. So how do you utilize them? Well, they basically do the planning for you. So once you get into a household that's interested in doing some college planning and seeing if they can reposition some assets, you direct them to the SmartTrack website, and they enter their data there with the third party, and then SmartTrack does all the work for you. The client's already entered their financial data, everything that would really be needed to complete that federal FAFSA form. And SmartTrack analyzes all of their data, where their assets are, how much they have, and then they come up with a plan that they then send to the client. Now, you don't have to do any of the planning, and you get the benefit of having it come from a third party that is going to look to the client as being very impartial. You know, they're just presenting the plan. They're not a licensed insurance agency. They can't implement the plan. All they can do is come up with it. So you don't have to be an expert in this area. But you are the one then that can help implement the plan. And guess what? Their solutions usually involve the clients moving money from whatever source it's in right now to something that's a little more advantageous for college planning. Could be an annuity. More than likely, it's going to be a life insurance product that they're recommending. And you're the one who can help them implement that and move the money where it needs to be. Now, you know, why life insurance? Well, assets inside of a life insurance policy are not counted on that FAFSA form. Universities and financial aid institutions don't take that money into account when they determine the family's net worth for purposes of determining what sort of financial aid that you're eligible for. So again, this works well with existing clients and maybe later stage planning. The kids are already starting high school. They've gathered some assets already. They've got some money. Now we're just going to help them put it into a more appropriate place. To find these folks, you could certainly utilize our Leads on Demand system, which we have available for all of our contracted producers. You can go out there and pinpoint whatever demographics you want to go after and get the names and addresses, in some cases phone numbers, and it's designed for you to do a mailing campaign. We also have a new system out there called Prospect Finder, and that allows you to do something very similar via emails. We know a lot of folks will respond via email that might just not respond via a mailer for you. So that's the SmartTrack Toolkit. It's a way to prospect and get in front of folks. It's also a way to help your clients do some detailed planning without you having to go to a whole lot of work. Now, if you want something that's maybe not quite so involved, also on the information gathering side of things, how about an old-fashioned fact finder? We were all trained to use these things our first 2 weeks in the business, and unfortunately a lot of us get away from it. But luckily we've got a couple of our carriers here, both ING and Mutual of Omaha, provide some software tools that can help. They have examples of current tuition prices at public and private universities in different parts of the country. And you can use this information to help your clients estimate the future costs of a college education based on where the pricing is today and also where the carriers expect it to be down the road. And you can pick your time period, whether it's 10 years or 5 years or 15 years before the child plans to go to college. You can use these fact finders in a couple different ways. The very simple way here would be to come up with a number that you can then add to your client's death benefit if they're interested in not only providing income and maybe paying off a mortgage, but also providing money for their children to be able to go to college. And that's something you can use with just about anybody out there on any basic life insurance you come across. You could also utilize this if you've come across the family who is actually looking to set aside some additional funds to help pay for college down the road. You've got to have a target number in mind. You know, when you do help clients with retirement planning, you know, you have a number that they're trying to reach. that they're planning to attain so that they know they can retire comfortably. Well, let's give our clients a number. Let's not just have them throw $100 a month or a couple grand a year into a product. Let's have a goal out there and then figure out what it's going to take to reach that goal. You can do that by using the fact finders these two carriers provide for you. And I think one of these is on a proprietary software which you've got to be contracted to utilize. We could certainly help you with that. The other one is on a PDF type format. So those are the fact finders. Now, once you've done all the fact finding, we have the number in mind. Well, what product are we going to use to get the people there? And things that we find work best in that regard are some sort of life insurance policies that will build up some cash value. Now, that could be a universal life. It could even be a return of premium term policy. Let's not forget about that. If the clients don't have maybe enough money to overfund a UL or an IUL, there's nothing wrong with the return of premium term life policy. One advantage you have there is you're going to know exactly the amount of money the client's going to receive and the exact day they're going to receive it. That's all set ahead of time. And again, that's also hidden from that FAFSA report because there is no real cash value there to even look at, and clients receive it all completely tax-free down the road. So the cash value policy, of course, will accumulate money on a tax-free basis. You can access that money either through withdrawals to basis, or you can take loans out of the policy, and those are received completely tax-free. Some advantages you might see versus, say, a Section 529 plan. Those Section 529 plans are great, but you're locked into using that money specifically for college funding, whether it's for the child it was intended for or another related family member. It's got to be used for college purposes, or you're going to be taxed on that money, may even be facing some penalty taxes too. So with a life insurance policy, you've got a lot of flexibility. If the child receives enough scholarships, or maybe they get their college paid for through the military, or they decide not to go to college, that money is still yours to do with whatever you like. You can keep accumulating for retirement purposes, or just cash it in, or keep it there for the death benefit purposes. But you certainly have a lot more flexibility here. There's really no maximum contribution level. You'll see that the Section 529 plans. The life insurance contributions are only limited by your MEC limits within the policy. Of course, you can't lose money with these. If you're putting the money into a securities-based product, hey, you could lose what you've got in there due to a market downturn. You'll never see that happen with a fixed life insurance-based product. So those are some of the products we like to use for college funding. And one note here, too, a lot of folks like to try to get a policy on the child who is looking to go to college down the road. Sometimes that works. A lot of times it doesn't. We can't always pump in enough money into a policy for a child, and we have to raise that face amount so high to put in the proper amount of money that now we're looking at a face amount that the insurers won't insure the child for. So a lot of times it works best to use policy on mom or dad for the benefit of the children down the road. Now, this is a great process to go through, but what if you come across a client who says, yeah, that's great, we would love to be able to put aside some money for our children's education, but money's tight right now. We're both working, the kids are in school, we're paying for sports and other programs, we don't have the extra cash right now. Well, what about grandma and grandpa? Chances are grandma and grandpa don't have those same problems. They're retired and they're living the good life right now. Maybe they have some extra funds to help out the grandkids. So, just ask a simple question about the grandparents. Do they live in town? Are they around? Are they involved? Maybe you can get referred to them, and maybe grandma and grandpa would like to provide the funds for this life insurance policy for their grandkids. college education. And where are some sources that Grandma and Grandpa might be hiding this money out right now? Well, maybe they're taking required minimum distributions from a qualified plan. Maybe they don't have to take that money. They're taking it because, I guess I should say they don't have to take it for their retirement income needs. They're taking it because the IRS says you have to. If that's the case, let's put that money to work for the grandchildren. And maybe they've got some legacy funds sitting around. There's some money that, their only intent is to pass it on to the grandkids anyway. Well, again, let's put that to work where maybe we can move it from wherever it is right now. Maybe it's in a CD and they're paying taxes on it every year. Maybe it's in a fixed annuity and it's tax deferred, but someone's going to have to pay taxes on it, and the longer they live, the more taxes are going to be due. A lot of times it makes sense to move that money right now before it grows to such a large amount that Uncle Sam is going to get a lot of that. Another great lead in here too would be if you have any senior clients, and maybe you're not working in the college funding market right now, you work in the senior market. Well, if you go into those households, look at the pictures on the walls. If you're dealing with folks that are grandparents, they probably don't have many pictures of their children anymore. They've been replaced by the grandchildren. And if you get them talking about them, they're just going to go on and on and on. They love the grandkids. They love spending time with them. Maybe it's because they can send them back to mom and dad, but they love being around them and would do just about anything for them. Ask them the simple question, well, do you know if your grandchildren's parents have done any college planning already? Have they set up an account? What are they doing along those lines? Get that conversation started and let Grandma and Grandpa know that, you know what, if you can get in front of mom and dad, there's a way that Grandma and Grandpa can provide the funds to help out those grandchildren, whether Grandma and Grandpa are around or not, to see those kids go to college and eventually graduate. So lots of ways to get Grandma and Grandpa involved in this process here. So if you think you've hit a roadblock with mom and dad, let's try another route here. Now, the last alternative funding source I want to talk about are college scholarships. What does that have to do with life insurance? Well, just so happens one of the insurance companies we work with here at Financial Brokerage is a fraternal organization. Foresters Life, they're probably the only fraternal that works through marketing organizations and independent producers. Now, if your clients have at least one policy in the household with Foresters, they are now a member of that organization. And children of members are eligible to apply for scholarships that Foresters gives away every year. They, I think, are currently giving away $350 per year. They're worth $2,000 per year for up to 4 years. And all you have to have is at least one policy in the household. You can have one person paying $20 a month, and now the kids are eligible for this additional scholarship opportunity. This is something that would work with the lower income clients. If now the parents don't have extra money to set aside for college, but Grandma and Grandpa don't either. Or Grandma and Grandpa are so far away you just can't get in front of them for that appointment. This is something that'll work with everybody out there, and I think this would be a good add-on for all of your existing clients that have children in the household, even if they're one of those folks that are going to work through the Smart Track Toolkit and they've got thousands of dollars already set aside. Hey, why not ease the burden a little bit here and get at least one Forester's policy in the household and have them get access to some scholarship money. Now, they don't just give the scholarships away. The children do have to have, I think, a B+ average. They have to complete an essay. They have to have done so many community service hours. And I think typically about 1,000 kids will apply for these every year. So they've got about a 1 in 3 shot of being awarded $2,000 a year for 4 years. So that's $8,000 that the family didn't have previously. So it's well worth bringing this up with all of your clients out there. So to kind of recap the 5 steps, the Smart Track Toolkit is both a prospecting tool you can use with clients and also a planning tool to use maybe more with those high-end clients of yours. Don't forget about using a fact finder with everybody that you get in front of to talk about life insurance. And the products you want to be using for this would be cash value, life, or return of premium. term life insurance. If you're running into funding roadblocks, don't forget about Grandma and Grandpa. They've probably got a little more free cash than the parents do. And then don't forget about the competitive scholarships from Forrester's Life. Now, a new item I'm going to bring up here. This is about ready to be launched on our website, and it'll be available for all of our contracted producers here. And it's our new College Planning with Life Insurance microsite. And this goes through step by step a lot of the concepts I just presented. We've got some training videos from some of our carriers here that go a little more in depth into the whole college planning process and how to use the various life insurance products to help with that. Step 2 goes through several of the prospecting tools we have available here. I mentioned the Leads on Demand system for doing mailers, the Customer Finder system for doing email lead generation. But we've got some systems out there that will help if you've got some funds available to help you with your prospecting, or if you just want to invest your time. There are some resources that we would recommend using. We've got the tools available, which include the fact finders and of course, the information on the scholarship program, and then a little more in-depth information on the products that are out there. Primarily, folks will end up using Index Universal Life or maybe a return of premium product. So again, this is available to all of our contracted producers. It's probably not out there today yet, but certainly by the end of the month, we're going to be launching the new College Planning microsite. So be looking for that. And that concludes today's webinar. I'll go ahead and check the screen here and see if we've got some questions. And I would like to thank you all for taking time out of your busy day to join us here this morning for this. And I'll also put in the plug for next week's webinar. I'll be co-hosting one on linked benefit policies. They combine life and long-term care, or life insurance and annuities together, and are really the popular way now for consumers to get their long-term care coverage. Adds a lot more value than just the traditional LTC policies. So hope you can join us next Wednesday at 10 o'clock for that. Take a look at some of the questions we might have here. And keep in mind, too, if you know some other producers out there who would benefit from this information, by all means, don't hesitate to give them our number. We're never too busy to see who else we can help out there. So, again, I'd like to thank everybody for joining, and hope you can join us next week as well, and wish everybody a successful day.